You're optimistic for next year, but the key risk is a hawkish shift in Fed policy and central bank policy. Did we see that today?
I think we did to some extent, but I think the bigger question is really, is the faster taper a precursor to a sooner liftoff and to a more aggressive liftoff? And I think that's ultimately what I think will is the bigger factor at play. And so I heard some of the discussion that you guys had just a few minutes ago, and we need to see, you know, obviously the Fed needs to address inflation, and I'm sure that probably there is some pressure they're getting from the outside, from DC. So we need to see to what extent they really follow through versus not. And again, I personally think, given that this is a midterm elections year and they probably don't also want to have demand and growth completely rolled over, you know, I think they'll probably end up being still somewhat more balanced. Look, the good side of all of this, we've kind of gotten the hawkishness and the faster taper sort of out of the way, right? So the market now has basically started to pricing a lot more than perhaps, say, you know, a month or 2 months ago.
Glass half full. That's interesting, Dubravko. I mean, it's also interesting that you say that politics could play a role. That would be obviously a market change from what the Fed should be doing in terms of considering the course of its monetary policy. Are you saying that it could be influenced by what is going on politically around it?
No, not by that. But what I'm basically saying is, you know, you want to see a good economy, you want to see a healthy labor market, you want to see an expansion that doesn't basically hit a wall. So I think the Fed, is willing to normalize, you know, keeping that in mind, right? So I think if the Fed is moving aggressively in a backdrop where growth is rolling over, you kind of go back to square one, and I'm not really sure what you're accomplishing.